Well, friends, good morning. So, the product of the day is onshore, offshore drilling rigs insurance. Onshore, offshore drilling rigs insurance. Hey, we have often heard about a lot of activity being carried out in offshore and onshore oil drilling, pipeline, etc. by the oil majors. So the investment involved is huge, and we would be interested in knowing about insurance coverage being given to these works. So the brief idea about the general coverage given to offshore and onshore drilling risk should be known, because various types of risk and properties covered under this are fabrication of well platform or process platform, procurement transit and land fabrication, transportation and load out, loading, installation and hookup, maintenance and third party liability. So these are the various types of risk and properties covered under this policy. Now, premium is charged as a percentage of sum insured for each stage of fabrication. Each section is subject to a deductible excess in any one accident occurrence. Cover provided is physical loss of or damage to property insured and is subject to institute clauses for builders' risk. Now, onshore unit. This onshore unit consists of fixed land rigs, mobile and rigs, and work over land rigs. Are you able to understand? Onshore unit consists of fixed land rigs, mobile and rigs and work over land rigs. So the cover is physical damage to the rigs and its accessories. Premium is based on age and type of unit and is a percentage of the sum insured. Policies are granted on annual value basis. Rigs and components forming part of the rigs are covered whilst in transit between sites and locations. So, what is offshore units? So, on offshore unit, jack-up rigs, semi-submersible rigs, drill barges, drill ships, fixed platforms like SBM. So the risk covered is on all risk basis, covering all physical damage to the rig and its accessories and collision liability. The premium is based on age and type of equipments used, operating area and environment. So the cover is subject to fixed deductible excess for any one accident or occurrence. The policy is issued on an agreed value basis. The sum insured can be split into hull and machinery and increased value. I repeat, the sum insured can be split into hull and machinery and increased value. Now there is a comprehensive general liability. This is the third party liability, comprehensive general liability. This is a third party liability of rig owners out of operation of the rigs. Coverage for agreed limit of indemnity and rating is based on factors like area of operation, type of operation, and limit of indemnity required. So a lump sum premium is charged based on these factors, and cover is subject to specified deductible excess in any one accident or in any one occurrence. So there is a provision of loss of hire also. Means the cover is for loss of earnings, hire, and or fixed standing charges on account of loss or damage to property due to any peril insured under physical damage cover, and is on the basis of an agreed daily amount of indemnity for the period agreed upon. So the indemnity is admissible only if claim is payable under physical damage section by operation of an insured peril. Coverage for agreed number of days, 60 days, 90 days, etc., and subject to the time axis. So the various types of risk and properties covered under this are fabrication of well platform or process platform. That includes the procurement, transit, land fabrication, transportation and load out, loading, installation, hookup, maintenance, third party liability. These are the various risks. But premium is charged as a percentage of sum insured for each stage of fabrication